Welcome back. It's not going to be a good opening for trade. Down almost 190 points on the GIFT Nifty. So we'll brace ourselves for that. But HDFC Bank is definitely going to be top of mind. Unimpressive numbers this time. Abhishek is here to give us the fine print. Abhishek, over to you.
Well, Sonia, if to begin, the focus will be on the LCR and CD ratio that the bank has. So credit deposit ratio is at 110% and liquidity coverage ratio is at 110%. What this means is that the near-term outlook on net interest margin is tough, given the fact that either they'll have to do a lot of deposit garnering, and which will come at a cost, or they'll have to slow down on the loan growth because the deposits cannot, meet the pace of loan growth. Either way, net interest margin can remain under pressure in the near term. Slippages were at 7,000 crore. Analysts were estimating anywhere between 6,300 to 6,500 crore. Asset quality has improved. Gross NPA ratio is at 1.26% versus 1.34% in the previous quarter, thanks to recovery and upgrades being at 4,500 crore. Core fee income was weak. It was almost flat on a sequential basis, despite the fact that there was loan growth of 4.9% quarter on quarter. Treasury gains have aided the top line. So treasury gains was up more than 41% on a sequential basis. Provisions rose sharply by 45.2% quarter on quarter. They did make one-off provision with respect to AIF at about rupees 1,220 crore. Now, lower tax rate has aided. The profit tax rate was at 15.7% when compared to 19.3% in the previous quarter. It seems like, there was sharp capital consumption, which might be on account of the RBI's increase in risk-weight assets. So, RWA to advances ratio jumped sharply to 97.6% when compared to 93.3% in the previous quarter. With reference to the PNL, the NII was below our poll, and thanks to, other income, PAT was ahead of our poll. Back to you.
Okay, thanks a lot for that. Well, Ashutosh Mishra of Ashika Stock Broking will be with us at 9 a.m. to review the HDFC Bank Q3 performance, so we'll keep an eye out on that. But L&T Tech is the other one that reported its numbers. Didn't look so good this time, Rima.
Well, at least not on the top line. The company's delivered a top-line growth of 0.9% on a quarter-on-quarter basis, and this is lower than consensus expectations of 2%. Margins have come in stable at 17.2%, an expansion of 10 basis points on a quarter-on-quarter basis. But despite the miss in Q3 on the top line, the company has retained its full-year revenue guidance of 17.5% to 18.5%. which means the asking rate in Q4 in the Jan to March quarter to achieve the guidance is quite steep, according to analysts, at 4 to 7%. In the conference call which took place yesterday, the company held on to its margin aspiration of 18% EBIT levels from the current 17.2% by H1 of FY26. The stocks had a pretty good run-up. Valuations are on the higher side, which is why many brokerages are a bit bearish on the stock. Citi has a sell call, MS underweight, Nomura reduced, and they've cut the target price to 3,880. So it's a top-line miss for L&T Tech this time. Back to you.
All right, Rima, thanks very much for that. Well, broking companies yesterday had a rough day, right? I mean, you had Angel, which sold off, IIFL Securities sold off, but ICICI Securities is the one that we're talking about this morning with numbers in. Upasana's got details. Upasana.
ICICI Securities has reported its Q3 FY24 numbers. The revenue is seen at 1,322 crores with a sequential uptick of almost 6%. The revenue growth was mainly led by growth in broking income in the cash segment and investment banking segment. The total expenses of the company has seen a marginal increase of 3% at 699 crores. While the operating margin of the company has expanded by 160 basis points at 47.2%. The company's PAT saw an uptick of almost 10% at 465 crores, and company's cost-to-income ratio has also reduced to 44% versus 45% sequentially. The company's client base has also expanded by 2% sequentially and 11% on YoY basis.
All right, thanks a lot for that. Well, Adani Energy Solutions is also going to be on our radar. They came up with a Q3 operational update, and we're going with green on that stock. If you look at the transmission and smart metering business, things have picked up over there. On the transmission business, they've added 302 circuit kilometers to their operational network. They now have a total network of 20,422 kilometers, circuit kilometers that is. In the smart metering space, their total contracts awarded in Q3 aggregated to 2 million smart meters with a contract value of 2,300 odd crores. And the total smart metering under construction pipeline consists of 8 projects now with a total contract value of 25,100 crores. They came out with their distribution utility business performance as well, and that too looked pretty good. So we're going with green on that particular stock. But ICICI Lombard will be in focus as well. Yash is here to give us the details. Yash, over to you.
Well, Sonia, as far as ICICI Lombard is concerned, Q3 looks like a good set on the top line as well as far as the operational performance is concerned. So look at the top 3 numbers. First one, net earned premium, that grew by about 13.5% for the company. Come to operational side, underwriting loss, that is reduced by 4% in this quarter. It's come in at about 282 crore versus 293 crore. Combined ratio, another important factor, that's improved to about 103.6 versus 104.4 on a year-on-year basis. The management in the analyst call spoke about how there have been 54 crore worth catastrophe claims which the company received. If that is to be removed out of the quarter, then the combined ratio improves even further to about 102.6. Now, as far as the operational performance is concerned, health has performed well. Retail health growing at 21%, group health growing at 42%. Motor, the premium growth has been lower at 2%, but of course the underwriting profit under motor segment has grown to 252 crore versus 117 crore.
Okay, all right. Yash, thanks a lot for that. Well, let's hop across to Mangalam. He's here to tell us about TV18's numbers. Mangalam?
Well, for TV18's numbers, you have to see the businesses that have done well. And if you just take a look at the reported numbers, consolidated basis, the revenues compared to last year are lower by a bit. Around 1,700 crores is what the company is posted. But on an operational basis, there's an EBITDA loss of 145 crores versus a gain of about 19 odd crores itself. And on the bottom line, there is a loss of about 12 crores versus a profit of 42 crores. Why is it that the EBITDA has been impacted? That's largely because of the sports business and the digital business, where the company has been investing or making investments in these businesses. So these have to bear fruit in the future. The TV business, which is the TV news business, out there the revenues grew 23%, but they are witnessing the benefits of operating leverage as the EBITDA for that increased by 253% at around 47 odd crores itself. The key trigger, however, will be the mega consolidation that was announced by the company, the scheme of arrangement between Network 18 and TV18. All of this, of course, with the disclaimer that these are owners of the channel that you're currently watching.
All right, thanks a lot for that. Well, Vivek is with us to talk about GMR Infra and how those numbers look. Vivek, over to you.
That's right. So GMR Infra, we are talking about the operational numbers. So both the passenger traffic as well as the aircraft movement the company has given for the month of December as well as the YTD performance. Now, total passenger traffic in December grew almost 15.5% on a year-on-year basis and almost 10.5% on a month-on-month basis. So December was quite strong as far as passenger traffic was concerned. Now, when you're talking about the YTD passenger traffic, it has jumped up by 23.4% on a year-on-year basis. Now, coming to the total aircraft movement, the total aircraft movement is up 8.3% on a year-on-year basis and up almost 6.2% on a month-on-month basis. YTD aircraft movement, again, quite strong, over 14% growth on a year-on-year basis.
Okay, well, that's the GMR Airports and Focus stocks done very well. Vivek, thanks very much for that. More stocks with news flow. Upasana is back with us with that list. Upasana, back to you.
Well, first up is DCB Bank. RBI approves appointment of Praveen Achyutan Kuti for a period of 3 years with effect from 29th April 2024. Next up is IREDA. The company has signed a MOU with Indian Overseas Bank for co-lending in the green energy financing. Next up is Piramal Pharma. The company has launched new concentration of zinc sulfate for injection in the US markets.
All right, Upasana, thanks a lot for that. Let's do a quick recap of all the stocks that are in focus this morning. Our top stocks include names like ICICI Securities, Adani Energy Solutions, ICICI Lombard, GMR Airports, Infra, TV18 Broadcast, DCB Bank, IRDA and Piramal Pharma, while stocks with negative news flow, HDFC Bank and L&T Tech.